been a down year for this, but we do have news that it may start to make its iPhones in India. Joining us now, Gene Munster. He is with Loop Ventures. Gene, now you are saying that Apple will reclaim the crown as the best tech stock next year. Make your case.
It's pretty straightforward, Charles. Every 10 years or so, there's a new paradigm in investing in Apple. The existing paradigm is to focus on iPhone units, and they recently announced that they will no longer provide that disclosure. And so we think in 2019 there's going to be a greater focus on the revenue and earnings, which really is this holistic view of Apple as a service. Now, when we talk about Apple as a service, we don't just refer to the 15% of their business that is services. It's the other 65%, the hardware piece, also starts having services-like characteristics and subscription-like visibility. And so our basic case is this, is if investors focus more on revenue and earnings growth, they will start to understand that this operates more like a consumer staple company. And consumer staples tend to have higher multiples. If you look at Clorox, for example, or Coca-Cola, they have multiples about double where Apple's is. So our case is that in 2019, there's going to be an emerging view of Apple as a service, an emerging focus on more of a consumer staples multiple, which potentially could double shares. Now, I'm not saying that's going to happen in 2019, but I think that that path will be laid.
To your point, though, when Apple, on this last earnings report, said we're no longer going to break out these iPhone sales, it was a shock. The stock has not yet to recover. And it feels like maybe they've reached some sort of peak with respect to the cult following, and maybe even now the average selling price, while it's going up, is starting to impact volume. How can Wall Street make this pivot that you're talking about? Because, you know, the consumer staples are seen mostly as a safe haven area for the most part this year in particular, in part because they don't have any pricing power. So is that really going to be what drives investors to buy this stock rather than the growth narrative that really has driven the markets in general?
So I think that, again, this is a transition. We think that 2019 is going to be an important year in that transition, but it will probably take 2 or 3 years to get there. And we do believe that there's risk to the March numbers. So that would suggest that our call is premature. But in fact, I think the way investors are going to think about this is look at this over the period of 2, 3, 4 quarters and think about the Apple story in that context versus hyper-focused on any given quarter, which I think that given the iPhone units, that tended to create this hyper-focus on something that doesn't really matter. I'll give you a quick example. Amazon doesn't disclose how many swing sets that they sell in any given quarter.
True.
Clorox doesn't disclose how many gallons of floor cleaner that they sell. What investors look at is revenue and earnings growth. And so the simple takeaway is, yes, I do believe that over the course of a year, investors will get increasingly more confident that we cannot live without technology and that this is, in fact, a new paradigm around consumer staples, consumer tech staple.
Let's take a look at Tesla and perhaps talking about paradigm shifts. Now, this stock got a pop Friday after they announced this major board shakeup. Some pretty good names on there. Of course, Larry Ellison standing out big time. Does this really change the narrative with respect to this as an investment?
Surprisingly, it does. And we have been critical of Elon Musk. It's easy to be critical of him more recently. And part of it is there hasn't been really a driving force when he gets into unhealthy behaviors. And Larry Ellison is unique. He is a personal friend of Elon Musk. Now, that doesn't mean that there's necessarily a grave conflict of interest. Larry Ellison was also on the board of Apple from 1997 to 2002, and he was also close friends with Steve Jobs, but also was a positive force in Apple's turnaround. But the key here is this, is Elon Musk is very unique. And you could argue that Larry Ellison was the original Elon Musk. And ultimately, that is someone that Elon will listen to. And I think when he veers into some unhealthy territories, that is the critical piece here. It's not about the product roadmap, the product itself, the production. They've gotten through some of those issues. It's about keeping Elon out of some unhealthy behavior. And I think that Larry Ellison is one of the unique people who can actually do that.
Gene, can I ask about cash positioning? Because we still have that convertible that still needs to be paid. $1 billion needs to be paid in the first quarter. Elon needs that stock price to get up to $359 each. Otherwise, he has to pay out. I mean, isn't that a concern for the markets? Is that being rightly non-reflected here?
it's probably not reflected. I think as we inched closer to that date, there's going to be more anxiety around that. But the good news for Tesla is that they'll have reported their December quarter before that debt payment that you're talking about comes due, and that should be a positive force that gets the stock above that hurdle. If they do not achieve that, if let's say that 360 or whatever the price is isn't achieved, they do have the money to pay for that. Now, it gets them into a very tight cash position, but they can get through that critical debt payment. So the simple takeaway on the cash question is this, is that they're in much better position than they were 6 months ago, but they haven't reached escape velocity. And I think that it's probably going to take all of 2019 to get there. I think when you put all this together, we think Apple's our top FANG stock. I think Tesla is still a great story to own because it's on that front curve of EVs, autonomy, and renewable energy, which is a great product roadmap.
I love the idea of Larry Ellison being the original Elon Musk. They have so much in common, and you're absolutely right. I do want to ask you about another stock that's taken it on the chin, Netflix. This new drama, Bird Box, huge, set new company viewing records in its first week. 45 million accounts watched it. Obviously, those are huge numbers. The stock has been up as much as $10 today. A lot of questions around Netflix. Where do you see this going in next year?
So we think this one is going to have some more headwinds. This is not in the camp of fundamentally changing the world. I mean, they have in the past, but they're not other life or world-changing kind of inflection points like Tesla or Apple will engineer in the next decade. So I think that, yes, 45 million, it's incredible. They have 118 million global subs, so we're talking about over a third of their subs have watched it. We don't have much metrics because they rarely give out those type of metrics. But I think if you fast forward 12 months from now, you're going to have Apple out with, call it, 25 or so. They'll have their own service, and Amazon's going to be more aggressively investing in video. So I think that competitively that gets much tighter. There is one headwind against Apple's original content. This Bird Box is it's a horror film, and that's not the type of content. It does very well for viewers, but that's probably not the type of content that Apple, for example, is going to come out with.
Is there a chance Apple could make a bid for Netflix?
That's talked a lot about. I think it's unlikely. I think a more feasible bid, even though it's very unlikely, would be Tesla.
Okay, good one. Hey, let me ask you about the Journal reporting Amazon now. They plan to build and expand Whole Food stores nationwide, make these like mega stores. How worried should the traditional grocery store market be about all of this?
They should be very worried. I think that traditional brick and mortar should be worried. Amazon obviously is dominated online. Online's still a small part of what we spend. It's about 15%, and Amazon has much greater ambitions to be a bigger retailer and offline. And I think if you fast forward a decade now, it's probably going to be 45% is going to be purchased in traditional brick and mortar. So Amazon needs to do a lot to ramp that up. They've got, call it, 480 stores with Whole Foods. They've got 110 stores with their own pop-up stores, 4-Star, and Amazon Go. So collectively, call it 600. That's far less than Walmart has in the U.S., which is 4,700 stores. So they're going to be a lot more aggressive. It's not just grocery stores that need to take heed to this development in the Wall Street Journal. I think traditional brick and mortar, we still believe we are wrong on a prediction that they would acquire, Amazon would acquire Target in 2018. But I still feel that that eventually will happen because that will give Amazon another 1,800 stores to be a more formidable competitor in brick and mortar to Walmart. That
would be huge news. Gene, we always appreciate you taking the time. Some great stuff. And
Thank you, Charles.
And we wrote it all down, so we'll hold you accountable. But you always hold yourself accountable.
Fantastic.